Very good morning, friends. I'm Nalnakshi Swami. Welcoming to my channel, Smart Index Edge. See, I'm analyzing the Nifty chart and what is happening in the Nifty chart. Actually, if you see, let me hide the indicators before talking this. Every time it has crossed this higher level, broken down above this, and it has dipped down to the level. So suppose if it would have wanted to come down, the market would have shown reversal here. It appears to be a genuine breakout and it is consolidating above this range. That is 24,501. The market is consolidating above the range. Yesterday was a narrow range day, compression day, and it is preparing itself for the higher move. Next move, it is preparing for that's what in the market we can see that. Everybody is getting confused by the closing auction. You need not panic or anything. You stop trading around on 350. Let it go. Whatever the trade is available for you as an option trader, trade within that limit. Don't bother about it, where it is going to close. After the closing session, it may adjust to some other thing, and do not try to trade that. Later, next day, the market will give you new direction, new levels, and everything. So, let me apply I have applied two indicators, Nalini Precision and Nalini Grid Zone indicator. I have combined both the indicators and I have applied this. See, if you see all the swing highs, I'm zooming it out, the market started, these are the base grid lines, it started coming down. And the pivot started becoming red. Okay, this is another swing. And also you can see another swing doing like this. Now, at present, the market has gone above this level. Can you see over here? Same thing. Pivot, Nalini Precision Engine pivot is retaining the blue color. That is indicating, and if you see the pivot boxes, these are the pivot boxes. It is shear compression. Compression may lead to expansion. And I have applied the grid indicator. It is indicating bullish, this one, bullish grid indicator, it is telling. So it was alternated with bearish to bullish. And finally, yesterday it has closed in the area of bullish. See, if you see this, if the market starts moving above 24,670, then we may see the expansion. Let me enable in the Nalini Precision indicator, even the R1, R2, and R3 also I am enabling, and S2 and S3. So if I enable all the levels, can you see over here? This is compression. Compression, and if the market starts moving above this, the market next level 782, 862 and 964. You can see these are the levels. Let me plot these levels. First R1, already this is the boundary what you are saying. Next level, we can mark the next level to be this one, and another level to be, okay, this one, another level to be this one. These are the levels you can anticipate for 24,959, 24,778, and one more level is 24,848. Let us go down in case market dips down. So if it dips down, let us put, this is the supports. 24,296, 24,421, and this one is the level. Below, let me change the color for this. Let me change the color to blue and make it line so that we will see. Okay, let me remove this and bring it down. And this one also, let me bring it. So, if it dips down 24,590 and the another level is 24,406 and 24,266. The way the grid line, base grid line, and the Gann Hilo is moving high, and the price is sitting above the balance line indicates the market every chance of moving higher. We should have higher bias if it goes to 779 and dips down, and it can move up to this. So we can anticipate 24,865 and the market is poised for bullish movement in the market. This is what I'm analyzing when compared to all these swings. See the swings. Let me change it to daily. If I change the time frame to daily, you can see the market is comfortably sitting above the pivot level. This is the base grid pivot level and the balance line. If we are on the daily time frame, Nalini Precision Engine will give you the balance line for the weekly. The weekly balance line is 24,234. If we go to hourly, we get daily balance line. It plots the daily balance line. Daily balance line is 24,601. So it is natural. Sometimes what happens is market when it opens, it comes to the support levels. That is, if it comes and starts from the support level, that is a healthy way of market giving discount for you. Like this, 24,518, it can move further higher. That is a natural thing. Every day, the market has done like that. It has gone, opened higher, came down to the discount area, and from the discount area, the market has here. If you see the path of the price action, market has consolidated above this area. So, let me take out, then you can clearly, you can also mark these areas. Whoever has bought my Nalini Precision Indicator and Nalini Grid Zone, they can mark these levels with the help of the Nalini Precision Engine, the levels. And if I apply without the Nalini Precision Engine, let me apply the Nalini Grid Zone. Okay, you can see the price is above the grid zone. If I take you to the hourly time frame, let me take out these drawings. See, this is how you need to analyze. You should not panic. This is the base grid line. Already market on which day it is? This is Thursday, Wednesday, Tuesday. Tuesday, it has dipped down and market has defined this range. The high range is 24,762 and the low range is 24,416. The next day, the market tried to come here and closed above this. See the closes. Let me zoom it out. Even though they are bearish closes, the closes are higher closes when compared to the previous day. Even this dozy, very small dozy, but with the long leg at the top, bottom indicates buying pressure from the downside. So market is poised, even if it gives us some small. So you mark the high and low of this candle. Low of yesterday's low was 24,577, and the market is, if the high of this candle was 24,677 and this is 24,677.05, these are equal highs, almost equal high. When equal high has been created, according to the smart money concept, the sellers have been induced over here. The sellers are induced over here, and the whoever may be the writers or anybody, their stop losses, their money is sitting over here. Let me pick up the tool. Let me write down text here. This is the money sitting over here. Sorry. This is static liquidity. It is available for the big money. So then it is every possibility, static liquidity. Here we cannot, the market can move to this level to seek the liquidity, and the market has been induced and market has taken the liquidity beneath this. Let me bring it down. Market has taken this liquidity beneath this. Market may seek the liquidity above this. After taking this liquidity, if the market doesn't fail, after sweeping this market, when the market moves higher, it sucks in all the liquidity. Then short covering rally may start in the market, moving the market to the next level, probably. Whether it may be today or they may go here, they may go to the 762 and they may dip down deeply, creating confusion. They may close in this way, and next week market we need to see in what way. But it is a positive structure. You can see the grid has moved higher. The grid has, that is nothing but price action. Price action has moved higher, and you can, this is how it happens. Market moves from one liquidity to another liquidity after taking the liquidity, because the big players are having the problem of liquidity. So they need the liquidity. For this liquidity, the drama has been created. Market has been halted over here. They have taken the liquidity in this area, and there is lot of liquidity lying over here. The market can seek this liquidity, grab this liquidity. Once they grab this liquidity, then only they will become and if they suck this liquidity and retest this level, and if the market start, it can reach the next higher level of 24,865. It can happen today itself, or they may trade within this range. They may suck this liquidity and they may close in here. The range for the market from here 646 to 764 is 100 points, and if it moves there 200 points range we are going to get in the market. Yes, friends, market is poised for sure because of seeing this liquidity, because of the nobody can suck this liquidity and close inside this range. No, only big money has the capacity to suck this liquidity and closing inside. And even though it is bearish closes, the closes are higher. Close are higher. It appears it is bearish candles. But the close, since the close are higher, we can anticipate by seeing the liquidity grab and there is liquidity lying over here, market can move higher. At least today, it can move higher to the level of 24,764. That is what. And later during the day, if it holds this, and writers will go for covering, and the market may move higher. Market may move higher, and I'm not seeing any data or anything. I'm just explaining you to people in terms of what I see on the chart, because price tells you everything. If you start observing the behavior, see the behavior of the candle, behavior of the closes, behavior of the price action tells you the whole story. Whole story, the big money is sitting over here, big money is anticipating this liquidity, and they may seek this liquidity. Once they seek this liquidity, they will become profitable. After becoming profitable, if they hold this level, they will expand to they will move forward to the next level. Then market, if we go back, you can see the market has crossed this level. Let me put this level here. See, market has closed above this level. The official, if it were to fall down, it would not have closed above this level. Since it is closing above this level, market is seeking for another higher level, that is 25,067. It may come within few days. It may take next week. We may see that level in the market on the Nifty. And you can see this is 100 period moving average, which I have applied on the grid zone, and this was declining, and you can see, so it is tilted upwards. Tilted upwards means the big money is flowing inside, money is lifting the market. So this is some logic you can see. See, when the market starts coming, it starts bending downwards, and the moving average is tilting upwards. This is an indication. Even if I go to the 15 minutes time frame, let me see the rising moving average, and the price action. You can see low, coming low. Many times market tested the lows and it is making higher low, and it stayed flat, and it is ready to move higher. Any dip, opening bell, it is a buying opportunity for you rather than going. Let me pick up the stool. Rather than any dip like this, 593, it is a buying opportunity for you people. This is how you can trade. It is a moving average. Suppose if the price comes to this moving average level, 24,582, you can anticipate for the move on the higher side. Sorry, friends. So this is the in-depth analysis by seeing the multi-time frame. I've analyzed by using two indicator, Nalini Precision Engine as well as the Nalini Grid Zone. Nalini Grid Zone, many people have bought, you can analyze it and you get confidence. Don't panic yourself. Yesterday was a tricky day because the market gave you swings, but there was no swing. It happens within every week, one day will be like this. To adjust the premiums, that means both, if we consider 24,600, the straddle has been converged with each other, the premiums. If we go, if premiums might have converged and the direction will be noted if the price starts in this direction. Then the straddle will move towards the 24,700. 24,700, the price straddle will move towards the, then you need to select the strike price 24,700 and you apply little bit in the money 24,500 straddle and 24,700 straddle instead of the mid one. You just start observing then, because this is the upper level. You can watch for this. These straddles, you watch what is happening in these two straddles, 24,500 and 24,700. You watch the straddles, then this becomes the in the money straddle. This is out of the money straddle. You get an idea what is happening in the market. You need to observe the market in terms of options, because option market is controlling the movement of the price action on the underlying. So that's why I created Nalini dual CEPE instruments. So clearly you can make out. So before closing the analysis, let me show you the straddle also. Let me apply the straddle. Okay, 24,600 I am applying. I am hiding all the indicators. I am applying this straddle. 24,600 straddle and 24,600 put and 24,000. This is the call option with the grid zone. And you can see this is the put option. Put option was making lower highs. And this call option had come down here. It was here in this range. When it made an high, this was the low. Both of them converged on 5th August. Yesterday was 6th August, today is 7th. They converged and the put dominated and you can see over here, put dominated to this level, indicating the market came down. If you remember, the market came down and the put dominated. You can see clearly on yesterday, even though it was a narrow range, the call has dominated. Can you see the call which was falling down like this made an higher low? Low, higher low. You can see there. On which day? On 5th. 5th itself it showed its behavior. While closing it made an higher low. You can see higher lows and it rallied. The role has been changed. Let me pick up this and mark it is the different color. Green for the call option. role has been see the behavior of the option premium in comparison with the straddle, and this one, let me clone it or let me take the pick up the tool and make it yellow. See, same color, I'm matching it. See the direction, they have crisscrossed. And it is clearly saying that market's bias is towards the upside. Once it crosses this level, 201, and this call option may reach the 240 initial level, it can go to 203. Even if it dips down, it is a buying opportunity because bias has changed, and you can see clearly, though put option is losing its base, put option is falling below the call area, call zone, support zone. It has made a lower low. It can seek a lower low, and it can even come down to 38 rupees by the time the expiry comes over here. Yes, friends, by seeing the option dual option premium engine, we were not clarity. I analyzed with multi-time frame, but the clarity of the behavior of the option premium of the straddle is indicating bias is towards the upside. Bias is upside, and also it has aligned above its pivot. The call option has aligned its above the pivot, and the put option is aligned above its pivot. Any pullback rally is a selling opportunity on the put option rather than the call option. Okay, friends, this is the analysis and the detailed analysis of the underlying in terms of multi-time frame as well as in terms of option premiums, so that you will have clarity in your trade. The bias, look for the sitting towards the call option because the bias is upside. Don't get confused. Wait for some time. Wait for the dust to settle. It takes time actually. Initial 10 to 15 minutes it will take because these straddles have moved wide apart. They will converge a little bit and then they will diverge. First, give the time for the market to converge so that market will give you some discount and you can trade better. Thank you very much, friends. Nalinaksha Swami, sign.